Moving on with this segment, we'll start with the next panel discussing on, is it a new era or was it a short-term growth trend in the field of e-commerce? Let's begin. The increase in smartphone users in India and the availability of the cheapest data services in comparison to the rest of the world have completely transformed the experience of today's Indian shoppers. The session will focus on the question if the growth trends in the e-commerce industry in the post-pandemic era are going to be just short-term gains or fruits to ripe profits for long. The moderator for this session would be Partner and Leader, Deals Strategy and Operations, PwC, Mr. Sankalp Bhattacharya. Let's welcome him with a big round of applause. Mr. Bhattacharya. Meanwhile, I'd also love to announce that I can hear the rumbling in your stomachs from here, and lunch will be served very soon, right after this session. So we're looking forward to this panel 3. Our moderator, Mr. Bhattacharya. All right. Mr. Sankalp Bhattacharya is a partner with PwC India and leads the deals, strategy, and operations practice for the firm. He has over 20 years of industry and consulting experience, and his focus sectors include retail, consumer, industrial products, and logistics. Our panelists for this session, CEO Shipyari, Mr. Nayan Ratan Dhaira, a chartered accountant and an entrepreneur by heart. He started his career from ground and climbed up the ladder to finance director as the youngest member of the board. Our next panelist, ladies and gentlemen, founder and CEO Upriver, Mr. Bakar Naqvi. He's a seasoned retail professional with over 23 years of experience in brick and mortar and online retail strategy and operations, having worked in leadership roles in consumer retail, focused consulting firms, as well as managing a 300 crore plus fashion brand as CEO. Director Requil, Mr. Vipul Gupta, a commerce graduate from Sri Ram College of Commerce, starting his career in commodity futures trading and worked in that industry for close to 10 years. He founded Requil in 2018 to offer effective cosmeceutical solutions for skin and hair that consumers can trust, ritualize, and know what to expect from. Yet another panelist that we're extremely pleased to have with us for this session is founder and CEO Foxy, Mr. Karthik Sheth. He's a founder of Foxy, a beauty e-commerce platform for D2C brands. Foxy has over 2 million installs and has been backed by Sequoia, Lightspeed, Matrix, and AWI. And the final panelist for this session, founder Swish, Mr. Ishan Grover, with a decade of experience in setting up and successfully building businesses from scratch. He's one of India's craft brewing industry pioneers and has established over 70 craft breweries across India. So all the panelists are already here, I see. Let's give them a big, big round of applause, ladies and gentlemen. And I request the moderator to kindly take this forward.
Good afternoon, everyone, and it's my pleasure to welcome my panelists on stage. We have a fairly eclectic group comprising all elements of the e-commerce value chain, from logistics to product companies to marketing companies. So it should be an interesting discussion. But just to set the context on the key question that we're going to debate on this, that whether e-commerce is sustainable going forward, or was it just a blip that happened during COVID times. Now, in terms of context, just some statistics. So India's retail industry is about $700 billion in size. E-commerce is 50 billion, and it's about 7% of the overall retail industry. That's grown fairly sharply in the last few years, often seeing growth rates which are unprecedented. And in the next 8 to 10 years, we expect this e-commerce industry to grow at almost a 20+% clip, which should take it to a number of almost 300 billion by 2030 and about 130 billion by 2026. Now, not all of this growth is going to be uniform. As some of you know, there are certain categories which are growing much faster. There are certain formats which are growing much faster within e-commerce. But needless to say, from that 7% of retail, it's going to be a significantly higher percentage going forward. Now, if you compare that to organized retail, it's taken a number of decades for organized retail to get to a significant share of the retail industry. And e-commerce is expected to move faster than organized retail, which is a big statistic to think about. We've all seen some of the changes that have happened in the sector before COVID, during COVID, and after COVID. And that's really going to be the essence of what we discuss today, that what's changed and is it here to stay. But purely from a macro perspective, I think consumers today have a lot of choice, which they didn't have even 5 years ago. There's a lot more preference for premium products. There's a lot more concern around delivery times, and we've all seen players trying to get faster deliveries across. And we also are looking at a bit of an omni-channel experience. Now, this has been talked about for many years, but hasn't really played out to the extent that it should be playing out in India, right? So, especially in the transition period from COVID to post-COVID, omni-channel has become a big buzzword, and you've seen a number of brands really taking their business omni-channel. So let me maybe start you know, with you, Karthik. What's changed in your business? And you run a marketplace, right? What happened before COVID, during COVID, and after COVID?
Well, so before COVID, at least from our business perspective, we didn't exist. We launched in the middle of COVID. Much harder to build anything new. So that is especially unique for us. But let me talk about the industry and I'll come back to Foxy in a second. So then over the last few months, I would say 3 or 4 months, we are seeing a big transition happen from in-home consumption to out-of-home consumption. So you're seeing entire sectors rebalance. You're seeing travel, hospitality, businesses which are almost in cold storage, eating out, have taken off, right? You can't find a table in a restaurant. You can't find a flight booking for what you could have paid for business class last year. As would normal economy भी नहीं मिलता, even if you book in advance. So you can see that there is a lot of consumption happening in sectors which was dead for almost 2 years or in cold storage for 2 years. And things which were in-home consumption are declining. You will see that across education, healthcare, delivery are stagnating or not growing as fast as it did over the last 2 years. But to me, that is just a natural shift, right? There's a bit of revenge purchase happening. We'll find an equilibrium. What has changed forever is the digital nature of the purchase journey. Whether you book a table for going to a restaurant or you order in, the journey starts on an app. And I think that's what's changed. The nature of e-commerce or omni-channel, I don't think these are different words anymore. So the way I see this happening is consumers are spending more time in retail, they're spending more time in offices, less time at home. So obviously the role of home delivery is falling, but the role of digital hasn't fallen. The role of digital in the purchase journey, the role of digital in helping you decide, choosing prices, finding the right product for you, the role of digital in lowering entry barriers so brands find it easier to launch funky products targeting a very niche audience. None of that has changed. There will be a difference in channel mix for sure. And if I take the Foxy example, we've had a store design in cold storage again for 2 years. We launched our store last month in Bangalore. Again, a digital experience. So you check out on your own app, right? You can have it delivered or you can pick it up. It also serves as a fulfillment center for the city of Bangalore. So this digital physical diwar of sorts, right, is gone. And I think the companies that are able to seamlessly move between the two will come out winners. I think pandemic, faster delivery, more convenient delivery, cheaper delivery were the winners. Now I think this seamless transition between online and offline will create new winners.
Thanks, Karthik. And no, omni-channel is indeed the future, as you're kind of describing it, right? The digital physical interface breaking down. Um, Ishan, moving on to you, we have 60% of Indians, 60 plus percent of Indians today who have a smartphone. It's expected to get to 80% of Indians. So a lot of behavior in terms of the digital experience and the buying behavior itself has changed. So again, from your business perspective in hygiene products, and obviously a lot of that is coming out of COVID, right? Behavior changes. Do you see some of that kind of behavior change sustaining?
See, we started in the middle of pandemic, so I don't know what happened before that. But what I understand is, if for a early stage brand like us, if we go to retail first, it's very difficult to tell people what we do and what our product is. The product gets lost on the shelf, and really nobody knows what it does. So what works for us on digital platforms is we are able to explain the usage, we are able to explain the differentiation of the product, and if people like it, then they buy it. And so that's why we feel digitalization, or I think the e-commerce on the digital platforms has worked really well for most of the D2C brands. Because आज से like 10 साल पहले अगर if somebody had to start a brand, then the traditional way is TV में ad निकालो, newspaper करो, everything करो, spend a lot of money. Today you don't have to spend that kind of money to start something like this. You can start at a slow pace, make people try your product, reach to a certain volumes, and then you understand, get feedback, and then you can change. So that's only possible when you are doing things digitally. It's literally not possible. And yes, eventually you have to have omni channel, but I think for the first 2 years we were purely on digital. Now we have started other channels, and that really worked for us because now people understand what the product is, and now people buy their product on their own from retail channels, from marketplaces. But initially that was very much required, and that really helped us. Yeah.
Thanks. Bakar, let me kind of ask you that follow-on question. And you've had an interesting journey across consulting, investing, and now on the startup side. We've seen an abundance of startups in the consumer space. And no, Ishan just mentioned that we want to start digital first, get to a certain scale, and then go offline, right? What is that tipping point? So what should companies do while they're digital, and what should they do when they reach that tipping point?
So I'll start with a little more generic view of the topic first. I think if you look at many sectors in the country and the evolution process across industries, India is jumping many of the individual stages in between. So while the organized retail was not fully organized on its way, COVID came and a lot of the consumer buying behavior changed. I think a lot became online. I think, and that is progression and skipping a few steps in between. Coming to your question, Sankalp, is so yes, today I see a lot of brands, D2C brands coming up and growing their business online first. Online is a channel where there are intrinsic benefits for startups. One, if you were in the traditional retail business, even to get a feedback, your first video distributors will buy, the distributors will sell it to retail, retail will sell it to consumer, the consumer in most cases does not have a feedback mechanism. Even if he has tells the retailer, in most cases that feedback never comes to the manufacturer or the brand owner. Now here's a channel where today at 9:30 in the morning, if we change anything online, by 12 noon, we will know whether it's working or it's not working. You will launch a product today. In 3 days, you will know ये product का initial feedback क्या है. ये SKU चलेगा, ये size चलेगा, ये packaging अच्छी है, नहीं अच्छी है. So the velocity or the response rate that you get from the consumers, the speed of response is different world. You can never get that kind of a response. So earlier people used to do sampling and testing and various kinds of things, and yet the consumer was very dilly-dally. आपको एक free sample मिला, आपसे जवाब दिया. In a mall you're walking, you don't want to kind of get disturbed. आपने कुछ भी जवाब लिख दिया उस पे. Half of those feedbacks, and in my life I might have done 30,000 consumer researches. 90% of the consumer researches you taking out what you want to take out. Now here there's a real consumer who has put in money, who has spent on the product, and he has used the product, and he's giving you real-time feedback. So I think the channel is the best channel for D2C brands to test out. And the cost is initially the amount of money that you needed to block in inventory for your product to be visible was humongous. Today, with much limited inventory, you can be across the country. So without a doubt, this is a channel for this, the D2C channel, the online internet commerce has made it extremely flat for new age brands to be there. To your question, what is the tipping point? I think there is no tipping point, but at a certain stage, the canvas which the online market today provides starts becoming a little. So I've done it like, I mean, look at brands like Wow and Mama. They've reached a certain scale. Beyond that scale, to achieve more scale, you need to go to the offline world, because online, if you look at retail, organizes 10%, 8%, whatever people say, but broadly in that range. Organized. Online is still smaller. So if you want to broaden your canvas today, organized retail is the way forward, and then modern retail, and then GT. At a certain point, if you want to be a 2,000 crore brand, you will have to be everywhere. The idea is not, you'll have to look at it as a brand. A brand needs to be multi-channel. A brand needs to be in all these channels. And I think D2C is only one of the channels. Now we are looking at it because it's a new channel as a new kid on the block. But finally, when the air kind of settles down, this is another channel for which is much more beneficial for newer brands. So I think every brand eventually will go there. What time, I think it's best for the brand to decide. But after a certain scale is achieved, consumers know you, consumers have bought your product, felt your product, and have a certain recall. I think that's the time to go.
Thanks, Bakar. Vipul, let me kind of move to you. You run a skin and hair care company, right? Any changes that you've seen in consumer behavior post-COVID, and any words of advice that you'd have for some of the startup founders in the audience, perhaps?
Thank you, Sankalp. I think during COVID, post-COVID, the biggest change that we have seen is how the buying behavior has changed. Your phone doesn't want you to leave your house. With the growing, I think, urbanization, growing traffic, and lower patience, we don't want to, maybe let's say, travel 1 hour to a movie hall, watch 4 hours of movie, come back, travel 1 hour. So I think it is become very, very difficult to take out that much time. Online shopping behavior or watching content, for that matter, gives you that liberty, gives you that freedom to consume or shop at your own will. I think that's really what has changed. And I think this is a great space for D2C brands, great time. D2C brands they have the great agility to offer very custom made, tailor or niche solutions that are not available on the shelf. So I think this is a great time to be in.
Thanks. Nayan, let me shift to you. So I was asking a client recently, which is in the D2C or the e-commerce logistics business, and he made a very interesting statement that 85 to 90% of demand that we fulfill currently is from the top 12 cities.
Correct.
So is this boom really an urban phenomenon, number one, and is this going to fizzle out sometime soon?
So what I seen, and I'll just brief it, what I see is a D2C segment. If you see 5 years back, D2C word was not coined. D2C word, and now it's an industry of 100 billion to be happen by 2025 is what we are looking at. So D2C phenomena will be post-COVID, continue to be there. And as you said, currently it is urban, but it is moving towards the rural and the Bharat, I'll call it, as in the rural part of the India is looking for it because they are sitting on the rich asset and they have a capabilities to buy it. It's just that nobody is reaching out to them. So yes, currently 80-82% is coming from the major segment of 12 or 15 cities. But what I see is the next growth coming is from the tier 2 and tier 3 cities. And in the since morning I am meeting the people, I got at least 7 requests that why don't you start in the east? Northeast is the market which is untapped and nobody is doing delivery there. We wanted to cater to that market. Arjun, which we were discussing, he is Dr. Vedya's, I think 13% order is coming only from the Northeast. So Northeast is the market which is developing. So as a logistic company, we also need to develop our capabilities and the reach to the masses, and we also need to go to the urbanized as a rural segment as well. So I say it's all across the India. It's not just urban, but yeah, starting is happening from the urban, and then it will go to the bottom in the line.
Thanks. Karthik, let me kind of go back to you. And again, on this question of whether the market is shallow and restricted to just the top 10 or 12 cities. And you could argue that the population in these cities is itself very, very massive, right? For your platform, are you seeing some of these new pockets of demand coming up, let's say from the Northeast or tier 2 and below cities?
Absolutely. I mean, Aizawl is a top 20 city for us, and we sell more in Dehradun than we sell in South Bombay, right? Some of it is our positioning as well. We want to be in markets which are aspirational, but these are also the markets which have seen high growth, which are seeing good growth. The reason why it's not penetrated as easily is fulfillment networks is part of that, but also fulfillment networks at a certain cost. Tier 2 cities tend to be heavier on COD, they tend to be lower on bill value, and therefore slightly less profitable to serve. So if we can find a way to bring down the costs, and I think we are seeing those new models emerging, right? Dark stores. If you're shipping Northeast from Delhi, it will always be expensive, right? You have to ship it locally, and it's a little bit of a chicken and egg. If you ship it locally, the demand will grow. But if you don't have demand, why will you build local fulfillment? So somebody has to take that call and build out that fulfillment locally, which will drive the speed down, drive the cost down. Digitization of cash is already happening for us. COD is less than 25% now. So that is a very good move, because COD tier 2 low bill value is just brutal for economics. So even if you can sell, you don't want to sell. So COD reducing is a big move. I think if costs come down, speeds increase, delivery time reduces, you will see that demand. Today, that demand is not seen because it is supply constrained, not because the demand is not there.
Thanks, thanks, Karthik. And let me kind of go back to you, Vipul, in terms of your kind of products and your business. I want to kind of build on Karthik's point where he said there is demand which is much more democratic, and he said one part of the challenge is really where do you place inventory and the cost to serve. The second really is, of course, product segments themselves, perhaps, which need to be relevant to the market. In your products, which is hair and skincare, right? What is it that you're going to do differently to really displace some of the incumbents in that space, given that you're still in the digital-only mode?
See, if you look at it, each one of us in whatever space, and we were having that discussion, Bakar, over coffee, that, at the end of the day, we all are selling commodities. There has to be a strong differentiator. There are multiple skincare, hair care brands operating. What is my strong differentiator and how well I am able to communicate it to my consumer? That makes all the difference. If not, then I'm just playing on price, and as you rightly said, the cheapest one would win. If I don't have a strong differentiator, then price is the only factor. And believe me, price is the last consideration that any consumer would have in its mind. Most importantly, you have to communicate your offering very well and connect to your target audience.
On that point, let me go to Bakar, right? So I'm sure this is a question which is on a lot of startups' minds, that how much should I spend on marketing? Let's say if I'm less than a 10 crore turnover company versus a 50 crore versus a 100 crore, how much should I really invest in that element of my mix?
So my only answer is as much as you can, because so look at forget offline, online again. Number of decades back, a brand like Thumbs Up was made in India, at that point had the thought that I am only a 1 crore brand or a zero sale brand, why should I invest X amount of money in marketing? They would have not been a brand that they are today. A brand like Fog was launched and they spent hundreds of crores just on marketing when the sales was zero. And within the next 2 years, they had a humongous sales. I think and this is a myth that people have that online is a very, very easy business. It's not. Ishan is sitting here. I've seen him toil day and night. And it's a business which needs you to invest and create a brand, and it will then sell. You cannot sell before you are a brand. If you do, and if you try to do, it's a short journey. A lot of people ask me another question, and I'm taking the liberty of taking this discussion in a different direction. So should we scale up first or should we look at profitability? If you are looking at profitability on day one, please don't be online, because you will not be. If you are profitable, your scale will never grow. Uh, to answer your question, build your brand first, whatever it takes. I don't know whether it's 10% or 20%. We have brands where marketing spends is less than 10% of their total sales, and we have brands which spend 150% of what their sales today are to be in the market, to compete in this larger ecosystem. The point is that you have to build your brand first. You can have a great story. You can have Alia Bhatt or Bhumi Pandekar or whosoever else be your brand ambassador. But till the consumers know that, till the consumers see you, you will not be able to sell. So I think the biggest cost today of brand building is being visible on the platforms on your own. And when I say platform, whether it's Amazon, Flipkart, or others, or it is Google or Facebook, or all of these are different kinds of tech platforms that you can sell through in a certain way. I think it's marketing is a very key spend, and don't shy away in the initial few quarters or years to spend on marketing, because look at it as an investment into the brand that you will yield results from in the future. Traditionally, if you were to open a store, you will, for a single store you of a decent size, you will end up spending 30-40 lakh rupees. Then you will think whether is this shop working or not working. Look at the online business just like that. That amount of money you're spending on customer acquisition, on getting your product sampled, making your consumers test out your products. So spend as much as the capability you have. Spend a little more than what you're capable of. That will give you results in the long run.
So given that we're running short on time, and let me ask you this question, actually two questions, and you can keep your answers brief. There's a lot of talk amongst D2C players at how many SKUs should I invest in, right? And many of them have a number of products, number of SKUs. The inventory is difficult to manage, and you only have a couple of hero SKUs or products, which really you would know more about because you deliver those products, right? So the question is in two parts. One is, should you have a limited selection to start with? Don't try to do everything for everybody. And the second is the point that was being raised on speed of delivery, right? Do you see the evolution of inventory-based models away from the marketplace models which are prevalent?
Got it. So the answer about SKU is different when you see the different segment. Let's say in the apparel, you can stick to one or two elements, but when you are going to the FMCG and the food, you need to have multiple product. Obviously, one or two or three products can be a hero to your kitty, but for a visibility perspective, you need to have multiple SKU initially to test the market. Or you do your discovery first and you identify, yes, this product is working well, then you can stick to one or two products. But initially, to start with it, you need to have multiple products or the SKU, I would say. And with respect to inventory based approach, yes, the initially, once you are testing the market, when you are evaluating it, you need to have an inventory, and but your inventory has to stay nearer to the consumer, because as fast as it delivered, like everybody or every D2C owner wanted to have an Amazon kind of experience कि मेरी पोर्टल में अगर सुबह 9 बजे ऑर्डर आया, मेरे को शाम को 7 बजे पहुंचाना. For that, you need to be nearer to them. Consumer आपके पास नहीं आ रहा, आप consumer के पास जाओ. That is the insight I'll give it to them. If you see your market where you are running very close to your consumer, you need to have your surveys and details that, yes, let's say Mumbai is my market and I'm keeping my all inventory in Delhi. It is not making sense. It is logistically cost high as well as stat is breaching. So you need to see which market is running for you, and then you can keep it all your inventory based on that. There are multiple flexi warehousing solutions. We give it or any other players are giving it. You should optimize that for best of your capabilities to avoid your capex on the inventory. You can keep limited inventory at all the stage, and then you can start evaluating that what works for you well.
Thanks. Last question, maybe to Ishan. I don't think any panel discussion of this nature can conclude without a discussion on this funding winter, right? And we are all playing a bit of a scare game out here. So I work with a lot of investors and private equity funds. There is a bit of a slowdown, I mean, quite a bit of slowdown. And there's also an emphasis on profitability, right? Time to profit, reduce your CAC, on those kind of elements. Is that going to be one of the inhibitors for the growth in the market? Because a number of startups are going to say that, look, I need to spend upfront, right? So the path to profit is maybe 3-5 years away. From your business and your experience perspective, if you can talk a little bit about funding.
So yeah, everybody is telling us we are not going to get funds in coming time because the times are really tough. We've just raised pre-series A, and in span of 12 months, I've raised 2 rounds. And what I feel is one thing every investor now knows is because they've invested in several businesses, several models, several products, and several categories. Now they know where to invest, and that is the reason majority of people are not getting invested, because now you can't tell investor a story. They know what ROAS is, they know what CAC is, they know what RTOs are, they know everything about it, because I've met so many investors who have been in this, who have invested in similar business models from last 7 years, and they know their exits and they know what's happening. So that is one of the reasons that I feel is the reason of slowdown, at least in D2C sector, is what I feel. And if you still have a great product, and if you still have a great run rate, and if you're still growing, I don't see a challenge why you should not get funded. It's the quality of a company, it's the quality of the founders, the ability of people to execute, and a differentiated product. We can no longer sell the same product from one manufacturer being labeled into different companies and expect that every investor will invest in us. That's just not going to happen. So now it's time for every founder to start looking at a differentiating products, which also sir said. And I think if you have everything right, the funding is going to happen. It's not going to slow down for anything. It's the quality of the companies that matters.
Thanks. I think we're just out of time. We just have a couple of questions from the audience. Maybe you can address those. So let me open it up to the audience. If you have any questions, please mention who you'd like to ask the question to, and then we can redirect. Is there a mic that we can?
Ankita, there are few people asking questions. Can you get the mic to them from them, please?
We'll take maybe 1 or 2 questions depending on time.
ठीक है इसमें ना नहीं मैं ये दे दूँ हाथ पे दे दूँगी Give me 2 minutes.
Hi. We were just talking about the marketing expenses and how much one should spend in digital marketing. So see, thinking like there is no limit to marketing is one thing if you're funded or if there are enough funds. But for brands or for businesses who have just started as a bootstrap business, they're affording even an agency is a much larger task. So, first getting that agency on board and, paying them a retainer of, let's just say 50K, 1 lakh a month. And then onto that, you're spending on different platforms. So there is no limit. I completely understand. But there should be some kind of way for these businesses to at least start their journey, reach at a level where they also feel confident that, okay, now if I spend maybe, let's just say 10 lakhs a month, it should, reap me some kind of success. So what suggestions you have for businesses who have just started their bootstrap, do not have such marketing spends to do? So like, do they start even doing that, or is it like, start building it organically till you reach that point when you have enough funds to, go all in?
Can I answer this?
30 seconds each.
Yeah, very quickly. This is my same story. I started up, I didn't know what to do. Trust me, I put my money on Facebook. Instagram, and that worked for us. There is no other platform. I mean, if you ask anybody, if you go to Amazon, it doesn't work like that. There are algorithms. There is no way to break through at an early stage. So only platform that you could actually invest money and still think of some kind of a return coming in is Facebook. I don't think so. Google works or has a scale or it works after some time. But if you're starting up, save every single penny, spend only on Facebook, and let's make Mark Zuckerberg rich. We don't know about us.
Thanks. Facebook, Insta. 30 seconds, Bakar.
Unfortunately, that is the cost, the entry. So I would put it like that, that's the entry barrier to business. Otherwise, all of us will do something and zero sum pe start kar lo. Wo hai nahi. The second point is that Facebook is good, but it also depends on the kind of product. Ishan and I work together, so I can say he has a very differentiated product. So Facebook works. There are multiple brands that we start on Facebook and they don't work. First, look at the product that you have. Every product will have a right channel. If you have a very Me Too product, unfortunately, there is no way that without spending a huge amount of money that you can break the ice. If you have a product which is unique, going to the customer on Facebook, on Google, whatever works for you is the best way. The customer can try out the product and then buy through your website or through the marketplaces. But first, look at the product. As I said, Me Too products today, you need to spend a whole lot of money to be anywhere.
Thanks, Bakar. We have time for one more question, maybe. Gentleman in the yellow shirt.
So lunch.
Last question, and I promise 30 seconds to a minute.
Okay.
My question is very much a follow-up of exactly what you've been discussing so far.
Sorry, if you could just be a little more loud.
I said that my question is a follow-up of exactly what you've been discussing so far. I want to know, can you fix a percentage? Allocate a percentage to the amount of advertising spent a guy should do. Say, for example, if you have plans of reaching a turnover of 1 crore, so can Mr. Naqvi give us an idea as to be 20% करें, 30% allocate करें ताकि आदमी plan कर ले.
Sir, so let me maybe direct that to Vipul. It's probably more relevant to you at an early stage. What should you spend? Percentage, absolute amount?
नहीं कर सकते जी. आपको टेस्ट करना पड़ेगा. Depends on what your product is. हो सकता है आपके प्रोडक्ट पे 10% ही काफी है. हो सकता है 100% भी काफी नहीं है.
Apparel पे?
So can I give a
15 seconds.
cut
I'm
answer?
getting stares.
What category are you into?
Apparel.
A minimum spend of 30% of sales you should budget. This is the bell curve. You could go to 5%, you can still be at 75%, but budget between a ROAS of 3 to start off with. That's a good ROAS to work with. Test out strategies. There could be a chance where you go to a ROAS of 5, 5.5, 6, even 8. There could be ROAS of 3 may not work for you. So depending on the product, at least from a beginning point of view, budget a ROAS of 3, which is a ACOS of 33%.
Thank you.
Thanks, Bakar. I think we're just out of time. We stand between you and lunch. So I want to thank my panelists and we'll look for the panel.
Thank you so much, panelists, for such a great and insightful panel.